My mentor helped me to develop and grow my strategies. And that's really where it started. Now you've got that choice, which is slow. And it's very difficult to get on the trading floors, right? It's hard to get in there. You've got to be pretty damn persistent. I was. Or you can go along and actually find someone who has trading strategies and you can learn from them. If you think you're going to go to YouTube and pick a little snippet from Joe over here and Sandy over here and Peter over here and put it all together and have success, you're wrong. Full stop. It will not work that way.
Dear crypto community and blockchain buddies across the globe, welcome back to season 2 of Cryptonites. We are here live from the CC Forum in beautiful London, and we're gonna dive deep into technical analysis, different financials related to cryptocurrency as a new asset class. And we have an amazing guest, 13 years of trading experience, Craig Cobb, AKA Trader Cobb. Good to have you, my friend.
All right, lovely to be here. Thanks for your time.
Thank you so much and thank you for the seminar.
Yeah, that was sick. I had a really good time doing that. Just a one-day event.
Your energy levels, man. How do you keep your energy levels so high from the morning all the way to the evening?
Yeah, I do get asked that quite a bit. The best compliment I've ever actually had, right? Is Steve Irwin. Everyone knows Steve Irwin, the crocodile hunter, that guy, right? He had a biggest amount of enthusiasm. Now, I grew up with that dude. I was in Australia near Biwa with him, hanging out, having fun, right? His enthusiasm rubbed off on me. Don't get me wrong, I do get tired. I love what I do, but I do a Wim Hof breathwork thing, right? So I do all these breath cycles to bring me back to life after a while. But it's just who I am. Like you do, like you got a massive personality too. It just comes out of you naturally.
Oh, thank you so much. But it was contagious. Like seriously, I enjoyed your seminar so much, and I hope more and more people can go there. And especially like these days, there's a lot of BS in the space, and we'll dive deep into that later. Sure. But and so my first question for you, Craig, is gonna dive into cryptocurrency as an asset class. Mm-hmm. So you have 13 years of experience. You went from equities to FX, but now you fell in love with cryptocurrency.
Yep.
Could you tell us a little bit about those transitions?
Yeah, sure. I mean, look, it's funny. I've done a full circle back to London, whereas where I learned to trade was in London. I haven't been here for 8 years. So the CC Forum having me back, I'm pretty stoked to be running around, looking at everything again. Just don't have enough time here. But equities, foreign exchange, bonds, commodities, you name it, I'd trade it. And it's because I trade technical analysis, which is basically a little human emotion on a chart. And the reason I came into crypto is, it really is dead set simple, mate. When it comes to it, you've got the most volatile market in the world. Now you get volatile markets in other sectors, but they tend to be like small cap, little tiny volume type things. You look at BTC, you look at Ethereum, XRP, EOS, Litecoin. These have proper volume, which allows you to get the size position that you want to get. And when you can get a decent size position in a market that moves so astronomically fast and hard, like Bitcoin or crypto assets, you just can't look back. It's like, the most intensely fast market in the world. Going from a Ferrari back into a mini moke, you're gonna stick with the Ferrari, right?
Yeah, definitely. So is it kind of like a kid like getting into this candy store for you in that sense, because it's so volatile, it's so exciting?
Yes and no, because a kid in the candy store just wants to eat everything and chuck it down their face, and then they're sick, right? So kind of yes and no. I mean, yes, there's a lot going on. The problem is a lot of the candy's poisoned, as in a lot of the projects suck. The volume's low, they're very thinly traded asset classes. A lot of them are highly manipulated because if there's low volume going through them, it's very easy to screw with the books. So there is a way of doing it, and as you have a larger account, you need to be more selective with what you trade. But I mean, that's what we do, man. Like we teach people how to look at a chart and understand if a market's thin and not tradable, or if there's enough orders going through. And one of the things that really annoy me about, and there are many, okay, don't you get me started. But one of the things that annoys me is all these people are talking about, oh, look at the order books, look at the order books. The order books are lying. They are lying. It might say 30 here. Behind the wall, there's about 600,000. Now, you can't look at the order book and think you know what you're doing, because it's just smoke and mirrors. You've got to look at the actual trades and transactions that have gone through. So there's so many things that, because I've been doing this for such a long time, I understand what's going on. A lot of people, I dare say most people are out there trading, and I don't say that to be disrespectful because they don't know what they don't know, but they're really just having a punt. People say to me, oh, I don't use stop losses, Craig, because I always get stopped out. It's because you're a crap trader. That's why. Stop losses are there to minimize your risk, and that's what we do. Is that you have to minimize your risk as a trader. If you don't have capital, you don't have anything.
That's such a great lesson, and so many incredible lessons are coming through your seminar. And there's one thing that you talked about when it came to trading. You said many people have technicals, they have indicators, but very few have a strategy.
Yep.
So if you don't mind diving deep into that, because that was really, really inspiring when you shared.
Oh,
that.
Thanks, man. Yeah, I mean, look, at the end of the day, what you're going to think about is a pantry of 5,000 ingredients in a professional kitchen. Right? Now, if you've been asked by a chef to make a souffle, yeah? Now, I don't know why souffles are so difficult, but it always seems on these cooking shows, everyone struggles with a goddamn souffle, right? You've been asked to make 10 souffles. You've never seen a souffle. You never tasted a souffle. You've never seen the recipe for a souffle. You've got to come up with 10 souffles. They walk you in a kitchen, there's 5,000 ingredients everywhere. You've got to try and pick the right ingredients and the right system and process to go it through and then put it in the oven for the right amount of time. What are your chances of getting that right? Nil. You're not going to get it right. Now, that is what trading is right now. You can go on, you can have 5,000 goddamn indicators, and you can make your chart so you actually can't see the price action. Right? You just can't. It's like all you got is like hijikis and blah, 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 all this crap that just causes you to not understand what the hell's going on. Yeah. So this is the thing that I get frustrated about, is that people teach technical analysis, but technical analysis is like some sugar. The sugar by itself doesn't bake a chocolate cake. Yeah, ingredients coming together to create a confluence of events that provide you with a precise entry place, stop loss, and target, or targets. That is a trading strategy. And what we do is we have a checklist-based system.
Yeah.
I created that for myself. I didn't build this stuff for others. All right, I did it for myself so I could be strategic, structured, disciplined, and focused and efficient with my time. So that's the reason why I think it's really important that people stop looking at trading as a technical analysis tool and start looking for the recipes that come together to create the magic, because without that, you're just pissing in the wind, man. But if we look at this moving average zone between the 10 period and 20 period moving average, I call it the cradle because it tends to be where it gets cradled before it grows up. Yeah, I don't know, it's an Australian thing. We have all these different things that we say. You'll get over it and you'll get used to it. We see it pull in once, it moves away, pulls in again, moves away. We see this wonderful cycle. The best thing about this cycle is that it's on any time frame and any asset class. Okay, so it's not just the weekly where this works. It works in any market as well, in any time frame. So it's an incredibly powerful thing to use. Now, of course, this is one ingredient that I use in the way that I teach people to trade and the way that I trade myself is through a literal checklist. So you're going through essential factors and ticking them off. I don't teach things that you don't need to know. Very big difference between trading technical analysis and trading strategy.
That makes a lot of sense. Like when you're creating this checklist of trading strategies or specific tasks that will create your strategy, like how can someone start by doing that? Like, do you have any tips on how, for people out there thinking like, oh, but I don't know how to build a strategy? Are there any ideas on where to start?
I mean, honestly, I can only speak from my experience. My dad's a builder, or he was a builder, ex-builder now, retired. He said to me very early on in my life, he said, look, Craig, all you've got to do is copy someone who's better than you and make it your own. And that's what I've done. I've been fortunate to have worked with some amazing traders here in London, in New York, in Sydney, in New Zealand. I've been very, very fortunate. And for me, it was about, I will make your coffee. I will get your bacon and egg roll. I will literally do whatever you want so long as I can stay here and learn from you. And I was working with 6 traders at the time. And I learned a lot from them. My mentor helped me to develop and grow my strategies. And that's really where it started. Now you've got that choice, which is slow. And it's very difficult to get on the trading floors, right? It's hard to get in there. You've got to be pretty damn persistent. I was. Or you can go along and actually find someone who has trading strategies and you can learn from them. If you think you're going to go to YouTube and pick a little snippet from Joe over here and Sandy over here and Peter over here and put it all together and have success, you're wrong. Full stop. It will not work that way. It will maybe take you years and years and years. And here's the other thing I find really frustrating is that people that have been trading for, let's say they go, oh, look, I've been trading for 7 years already. Who cares? I couldn't care less. Are you consistently profitable? If you've been trading 6 months and you're consistent through those 6 months, you're better than the person who's been doing it for 10 years. because you can look out and you can be jumping and grabbing at all the flashing things like new indicator here, new thing here, new thing here. And all you're doing is spinning around and around and around like on the merry-go-round. You can't get off the goddamn thing. You got to get off at some point and get into that Ferrari and start going forward, because if you don't, well, you just keep going around in circles, right?
Yeah, definitely. So the trading strategies are really for consistency.
Absolutely.
Is that why you have a strategy?
Consistency of approach equates to consistency of returns. The one thing that I can't teach, we try a lot in the psychology side of things, and the very fact that it is so structured through a checklist, is I can't teach patience, all right? A lot of people will overtrade. They'll take too many trades, right? And then they'll undertrade. So they'll be like, oh, I'm scared. But what you've got to understand is that it's about trading frequently when the market allows it. 80% of your profits will come from 20% of your trades. It's taking the step-by-step approach. Consistency of the strategy. You as an individual, you've been in the courses, so you as well, Alex, you need to understand that you've got to put yourself in the right headspace, because the only variable, once you've got a checklist system, is you. So you need to work on yourself to make sure that you're cool, calm, and collected when the time comes to sit in front of that computer screen.
Yeah, so just being mentored, trying, learning about yourself, and then just finding what rules are best for you, basically, right? To ensure that consistency. So I know in your course you talk a lot about MACD. Mm-hmm. If you don't mind telling us what is MACD and why you love that as an indicator for cryptocurrency?
Yeah, sure. So MACD stands for moving average convergence and divergence. Now, because I talk a lot about convergence and divergence, because from my point of view, I don't use indicators. I'll never use an indicator to put me into a trade. I'll never use an indicator to get me out of a trade. An indicator will never make me hit buy, and it will never make me hit sell, because they're the two options you've got in these markets, right? Strip all the rubbish back, you can buy, you can sell. That is all that you can do. There is literally nothing else that you can do, so it needs to be simplified. Now, I use the MACD in agreement with price action. So for me, the MACD, price action is my God. It is my kingdom. It is my everything. I know everything about price action that there is to be known. At the moment, I continue to try and learn more. And that's just because of the, more than 20,000 hours I've spent staring at computer screens. Sounds boring, right? Don't get me wrong, it can be. But the MACD for me, I need MACD to be in agreement with the trend. So what MACD does for me, as opposed to like making me buy or sell, it's kind of like a mate that goes, oh, hang on, you're about to jump off the bridge. Dude, it's too shallow. Don't do it. It's mid-tide. You go, oh, maybe I could jump. Maybe I won't do it, but it's not worth the risk. I'm going to step back and I won't do it. So the MACD for me tells me the same thing. Momentum's starting to look like it's waning. Oh, I don't want to be with the waning trend. I want to stick with the same trend. So it helps me to stay out of trades. Won't put me in, won't take me out, but it will stop me from actually taking a trade.
Awesome. Thank you so much for that.
It's a handbrake.
It's a handbrake. Yeah, that's awesome. And there's so many interesting things that you said. Obviously, if you give a fish to a man, you feed him for a day. If you teach him how to fish, you feed him for life.
Yep.
But many of these online YouTubers may be giving them the wrong pod to actually fish, or a lot of people seem to be copycatting each other or just taking random technicals. And I remember one part of your seminar, you're like calling out a few technicals which to you don't make any sense at all, such as the RSI, and you also talked about it was sloping lines.
Sloping trend lines.
Yeah. Can you tell us about all those ascending triangles, descending triangles? And
let me just load my social media shotgun. The white line is a 10-period moving average. The purple line, well, that's the 20-period moving average. And I don't use crosses. I don't use the 50-period moving average or the 200-period moving average. I don't care about a golden cross or a dead cross, because I understand what a moving average is. It's a moving average of price. That's what it is. So what happens is when the market does this and doesn't move a great deal, it's like two snakes making love. They're intertwined, wrapped up together. As soon as the market moves either up or down, then you see it unfurl and they're nice and open. It makes it a wonderful, wonderful hindsight indicator. Hindsight indicators can't do anything for us. So I use moving averages in a very, very different sense. That's why, no offense to anybody out there who uses these things, but there's a lot of people out there trading in the crypto asset market at the moment who really don't have a clue. And that's okay, because I started with nothing as well. I had to learn from great mentors and go through the hard knocks myself. Look, social media, the analogy of give a man a fishing rod, feeding for life, yada, yada, that thing. I think the problem is a lot of these social media people is they're actually giving you a tennis racket to play golf. It's like you're going to the wrong field to play the wrong sport with the wrong tools. It doesn't make any sense, right? But because they've got a big following, of course, they must know something. Like they will make Kim Kardashian, the expert on crypto, the second she opens her mouth about it, right? So from my point of view, when it comes down to those indicators, it's how you look at them, how you use them. Now, don't get me wrong. I know there's dudes out there and chicks out there that know exactly what they're doing, that they're doing well, they're trading well, and they're using all sorts of different things. I'm not the only person, I certainly don't think that I'm the only person in the world that knows how to trade. I just know what I know, all right? And because I've got to be strict in my methodology, the rest of it's shithouse to me, right? From my point of view, the RSI, it seems to be a really big one here in this country, in this community, as in crypto. Overbought RSI, underbought RSI. Why does everyone put such an emphasis on it? It's because it's taught in day one of crypto, in day one of trading books, RSI. Most of the crypto community still haven't read the first chapter. I've read the book 6 times, I've written my own, do you know what I mean? So with RSI, if it's overbought, so to speak, 90% of my trades are when RSI is overbought in the traditional sense of using it, because it means it's a strong trend. See, I'm not trying to trade against the trend. If the RSI is up and you go, okay, if it breaks down through the 70 line, I'm looking to sell, then that means you're selling against the trend. I don't try and pick bottoms because you get smelly fingers, and I don't try and pick the top, okay, because it's too dangerous. I take the chunk in the middle, man. And that's the more consistent place to be. So that's why RSI for me, it's not an indicator that I use. MACD as well. I take the signal line off, right? Because what's the point of it? There's no need at all to look at those crosses and same with moving averages. Oh, the 250 period moving average crossing over. You do realize that while the market's going like this, it's like two snakes making love. They're wrapped up together all over the place. As soon as the market starts to move, they unfurl. And now it's the best hindsight indicator you've ever seen, because before every big move there's a cross. What they don't realize is while the move hasn't happened, while it's still sideways, they're twisted up. So again, it's a complete false fallacy about how important a dead cross or a golden cross is. It means absolutely nothing to those that know what they're doing.
That's really interesting. I mean, I was blown away when you were talking about how the RSI, well, it just tells you if it's overbought or oversold, but when there's a trend, it's overbought. So it makes a lot of sense on how that might not fit, or might not be the best criteria.
Well,
when looking
what's
at
an indicator? Okay, it's what people forget to realize is there's logic behind everything. They throw the logic out the window to focus on what they think they want to attain from whatever it is, right? So from my point of view, an RSI, it's an indicator. Okay, so let's think of where else indicators are used. Okay, you're driving down the motorway, you're going to turn right, there's a head-on traffic, like right, got 110 kilometers an hour, right? Big truck right there, your indicator's on right. Does that mean you're going to pull out in front of the truck and kill yourself? No, it means you left the indicator on. That's it. It's not called an absoluter for a reason. It's an indication of what might come. People are putting too much power into an indication of what might be, as opposed to looking at all the individual ingredients to collectively, momentum-wise, understand where we're likely to go next. And in trading, all you have is probabilities. You literally have nothing else.
Nothing else, definitely. And so, talking about the sloping lines, that was so funny. You have one page in your seminar book where you have like ascending triangles, descending triangles, all these sloppy lines all over, and you just came in with a ruler and said 180 degrees. That's it.
Yeah.
That's all you need. Stop with all these crazy lines on your chart. Can you tell us a little bit more about that? That was fascinating.
Yeah, mate, absolutely. Look, I had a fantastic mentor for a good 4 years. And he's like, look, just follow me. I'll teach you how to be a great trader. Don't worry about it. We'll get there. All you need to do is do what I say. I'm like, okay, cool. That's easy. I kept drawing sloping trend lines. He goes, look, I'm like, I know better. I know what to do with these things. These are fantastic. He goes, one day, look, if you use them anymore, you're gone. Okay, all right. Got rid of them. Changed my trading forever. Now, the reason I used to use them is because I used to try and trade bounces off of these sloping trend lines, right? Problem is, what would you do? Okay, I know everybody who's watching this right now, if you're using sloping trend lines, you've done this. Guaranteed 100%.
Yeah.
You got your line here. If you're going to trade a bounce off it, you go, oh, it didn't quite get there. So you move it. And now it hits. Now, the market is a partner in dance. Okay, the market is a partner in dance. Now, get me, wait, I'll tell you what that means, right? When you're on the dance floor and you're swinging around and she doesn't know how to dance, you drag her everywhere or him everywhere, and all of a sudden you look an absolute twit. You got 2 left feet, you're like an elephant dancing, right? Now, if you put some training into things, you look wonderful and magnificent. If you go to the market and you try and jerk the market to where you want for the outcomes that you desire, it ain't gonna work. Because the market doesn't give a shit about you. It doesn't care about you. You need to care about the market and get in its flow and dance with it, right? You cannot go into it trying to do things. So with the sloping trend lines, they're too subjective. If you've got a thing that you can have, the only degrees you don't have is 0 and 180, you can literally do whatever you want. 180, objective. Like every other trading rule I've got, objectivity wins. Any subjectivity, poof, out the park, kick it out.
And that makes a lot of sense because you're saying like 180 degrees, you cannot change it, you cannot be subjective,
it is
like
what
you
it is.
said, and it doesn't have 360 degrees, which makes things even more complex and more subjective.
Yeah, exactly. It's objective thinking for outcomes based on the two things you can do. You can buy, you can sell. Let's keep shit simple from now on. Let's get people that actually learn how to trade and not just go out there like with candlesticks, or it's a shooting star, or it's a doji. Who cares? Call it Tom, Dick and Harry, call it nothing, I don't care. It's the story that the market is telling you. I've been reading this story for the last 13 years every single day. I'm pretty good at reading that book. So it's about understanding what is actually going on as opposed to what you think might be going on because you read some crappy book somewhere. When to buy and when to sell. When to buy is when you're looking for price to come back into that cradle zone, in and around that 10 and 20 period moving average. When it gets very, very extended from that moving average, that's at which the price you're looking to sell. Now, the more time you develop in the market, the more you learn, the more you understand, the more this will make sense to you. But just using these two very simple moving averages, the 10 and 20 period, will help you in a massive, massive way.
So and there's one really funny thing that you were talking about, the bees.
Oh,
genitals,
yes,
yeah.
yes.
So if I'm tracing a line, that 180 degree line, to try to find support and resistance, what if it doesn't perfectly trace? I can't actually.
Yeah, so I'll say it for you, mate. Okay,
Thank you.
I'll say it, right. So I've got a very simple rule. The reason I say these things is because people will remember it, okay? It's about sinking something into their heads so they remember. If you're going to draw a horizontal line and it doesn't meet exactly, one's poking through just a little bit, it's called the bee's dick rule, all right? Because if it's poking through just a little bit, well, how big's a bee's dick? It's pretty small. So if it's just poking through the bee's dick rule, it's okay. You trade it above the bee's dick.
That was so sticky, by the way.
Well, that's what I mean.
Everyone can remember that. Yeah.
Who's talking about a bee's dick? Well, I am for some strange reason. That's probably the Australian in me, I suppose.
That was so cool, man. So all we need to do is, it doesn't need to be perfect, but as long as we can understand
as
more or
long
less.
as it's just like a little tiny bit going through, hey, it's okay. It's respected at horizontal level, and I'm cool with that, yeah.
Obviously, Craig, you want this space to succeed. You really want cryptocurrency to define itself as an asset class, having sub-asset classes. As you know, today, Bitcoin is the real mover. Whenever Bitcoin moves, unfortunately, the market, or fortunately, obviously, I would love to hear your take, moves with it in tandem. Is that a good thing for us or a bad thing, the fact that Bitcoin leads the entire market?
Yeah, look, it's an interesting thing. I mean, whether it's good or bad, I'm neither for or against. What you need to understand, though, is that let's say you're trading with margin, which I love to do, of course, a little bit for a lot. I'll take that every day. Let's say you're trading the market. From when Bitcoin goes up, the rest of the market does tend to follow it. So you just need to manage. If you're going to if you've got three trades, Bitcoin, Bitcoin USD, Ethereum USD, and say EOS USD. You've now got 3%, if you're risking 1% per trade, exposure to what? The USD.
Yeah.
So if the whole market goes up, you're going to kill it. If the whole market goes down, there goes your 3%. So you've got to look at risk management, not just on the size of the trade that you're taking, but also the correlated pairs. So if I was to trade long Ethereum Bitcoin and long Ethereum dollar, they're two totally opposite trades. Because one's matched or one's paired against the base rate being BTC, the other's matched against the base rate being USD, so they will move differently. What I find very interesting at the moment, and I guess not what I find interesting, but the way I work the market is recently, sitting here in October 15, I think you said it was, right? Yeah. October 15, right now Bitcoin's been doing this. It's been caught in a bit of a range. Now, a lot of people will sit back and go, there's nothing to do. Wrong answer. Go across, trade the alts against Bitcoin, stack your sats. If you believe in Bitcoin, you believe in building your sats. Or build your Bitcoin, transfer it back to capital, and go buy a boat.
Absolutely. Do you like to see that? Because some people think of their wealth in terms of USD, but some people think of, I've accumulated more Bitcoin. How about yourself? What is your...
Oh, mate, look, I think that Bitcoin's got a big future. I don't know when it's going to go higher. I don't know if it's going to be the standout. These are things that nobody knows.
Nobody knows, yeah.
I'm not a Bitcoin maximalist. I find it very difficult to be, like, for anyone to be a maximalist, simply because how can you be so stubborn, but yet you manage to get into the most interesting market in the world very early on for a lot of them. So how can you possibly shut your eyes to the power of blockchain in business? I'm not sure. But yeah, I stack BTC and Ethereum. I think Ethereum's another one I have a fairly decent holding of as well. Just because I think that, I don't think we've hit the year 2000 and the dot-com boom. I'll be there when it happens, and I'll be exiting my BTC back into probably AUD or USD at the time, and wait for it to pull back, and then I'll jump back in again. It's just a market cycle.
There was, the other day we had the CEO of Zilliqa. Thank you so much, that was an amazing answer. The CEO of Zilliqa was saying that, if you want to find those hidden gems, that may eventually be like the dot-com survivors, he said you really got to look at sub-asset classes. So this is a smart contracts portfolio. Here there is an XYZ scaling portfolio. Here's a, do you kind of see it like that? Do you see a future for altcoins, as you were saying, as these...
Look, I see a future for blockchain-based businesses. That's what I look at them as. I was speaking with my mate Brad here last night about a lot of projects, and I'm like, why do they need the token? Why does this project? Is it just to raise capital? If that's what you're doing, just be honest about it. And we saw that a lot in 2017 with poor treasury management. Most of these companies have just since disappeared. I believe that blockchain is a very, very serious contender for a world-changing opportunity, right, for business. I want to see why the token needs to be used and what that business is doing. When is that business getting to revenue, and how is that business getting to revenue? Now, I don't look at a token for token's sake. If the token is the way that I get access to the underlying asset class, which is the business and the revenue model, hey, link those things together and I'll take a good look at it. If it's a token for the sake of token's sake, I don't care what the thing is. The token might be worth nothing, the business might be worth $1 billion, but the token holders don't get anything of that, if that makes sense. So yeah, I think there's a place for altcoins. For me, it's simply trading for the time being. Longer term down the track, I'll have to wait and see what comes out. So far, it's been pretty difficult to find things that really make a lot of sense to me. But don't forget, I'm not someone who researches projects every day. I'm in the market trading every day, and that's what I do.
Awesome, man. And there's one thing that when you're using TradingView, that was really cool. I remember at the end of the seminar, you would actually just scan through multiple projects and put little flags on the ones you're interested in. Do you mind telling us a little bit about your train of thought and creating your watch list and just a little snippet of that? That was really fascinating. And you were so fast at reading the charts.
Well, I was doing that slow.
Oh, you were going through this
slowly? I was doing that slow for the audience. So every morning I do, every morning 5 days a week, I do a scan on tradercobb.com called Live Trading Floor. That's where I do that scan through all the margin pairs to try and find what opportunities are available, and then the top 150 BTC cross pairs, right? That's based on spot market, so no leverage. But yeah, so for me, it's generally looking for I'm looking for trend, multiple time frame trend, moving averages to be in the correct order, and if you want moving average, it's a 10 and 20 period exponential, and convergence or divergence on that time frame. It's pretty simple stuff. Trend, moving averages in the correct order, and moving average convergence or divergence. Now, because my 3 trading strategies, the Bitcoin breakout, crypto cradle, and Fibonacci booster, they're designed around what the market does. The market goes sideways, then it breaks. That's the breakout strategy that I've got in place. Now, I know lots of people have traded breakouts. Yeah, I get it. Everyone's got a breakout strategy, but a lot of people get faded out. It breaks out, then it goes poof. It's almost like they're going, is someone watching me? Every time I get long, I go short, right? The cradle is when the market's trending really nicely, like Tarzan, swinging from vine to vine. It's just like beautiful cyclicity, pulls back in, little bullish candle in that uptrend, bam. And then the third one is when the market absolutely goes gangbusters. What was it, back when we broke through that little breakout of 8,089 and we raced up towards 14,000. Through there, we didn't really pull back, dude. When it doesn't pull back, you've got to get down those lower time frames, and the market does this, ping, ping, ping. So I've got 3 strategies because the market moves in 3 different ways, okay? When you've got that in place, you're looking at trend first, moving average convergence or divergence, and the moving average, Yeah, trend moving averages and moving average convergence and divergence. Throw that into your watch list. Now all I have to do is check that a few hours every day when I get the chance to. I don't have to look at the rest of the market. It's simple stuff. It's about finding what fits your rules. So I don't go to the market going, I want to find a trade. I go to the market and I eliminate things. Every chart I'm trying to eliminate until I get to a chart where it's so good, I just can't leave it alone.
I love that mindset. It's really, really beneficial for everyone who wants to trade and invest, because rather than looking for the opportunity, you eliminate all the crap first.
Yeah.
And that's so important, right? You look at a long list of potential trades,
Yep.
and it was so funny. You're like, no, ew.
Yeah.
You were making little sounds,
Yeah,
kind of like, oh no, that looks disgusting. And one of the best lessons I've learned is, if you're not sure, just don't do it.
Yep. If it's not clear, it's not there. Number one rule. If it's not clear, it's not there. And that doesn't mean like to me, it might be clear as day. But you can only make your own decisions based on your own understanding. And you're not going to climb Everest in one step. I've climbed the goddamn thing. Slowly but surely, I've climbed up the trading Everest, right? You're not going to do it in one day. Take your time. Look, if it's not clear to you, just leave it alone. As you progress, as your experience goes on, the courses are all there online for a lifetime membership. You can go back through and do it again and again and again. I couldn't care less. That's the idea of it. Refresh. But if you are not going in there step by step and taking the pressure off. So the whole thing about the if it's not clear, it's not there rule is to take the pressure away. Trading is not something where you will do well under serious pressure. People go, oh, isn't it stressful? It can be as stressful as you want it to be.
Yeah.
Or you can just be cool, calm, and collected and go, you know what, I refuse to be stressed. If it's not clear, it's not there, move on to the next one. If it's clear, I'll take it. There's going to be plenty more trades, man. There's going to be plenty more opportunity. If you missed this one because it wasn't clear, who actually cares? Doesn't matter.
It's so good. And I remember people, they were in the crowd and they were like, well, so you asked them, is this a good trade or not? And they'd be like, no, you're thinking that's wrong.
Yeah.
If you're thinking too long, then you're taking risk.
So when I do my scan, I'm like, everyone's got to tell.
Yeah.
Everyone's like that tell, right? They're like pull a face and they go, the second that sound comes out, move on to the next chart because it's not clear.
That was so cool, so simple. And really people realize that they tend to overthink things.
Everyone overthinks things because we're brought up in a society whereby the smartest person gets the best grade and the pat on the back of their head. Trading doesn't work that way, man. As a trader, you just need to be simple at what you do and very good at it. Just because there's a horizontal line, there's 3 tests. What else can I read into this? There's nothing else to read into it. Stop thinking, start doing. You know what I mean? Like, you don't need to think, man.
But it must be hard for you because, like you said, we were just, through education, we learn how to try to make things even more and more complicated for tests. And the more complicated we go and the better result and the better grade and all the crap that goes, after that. And you're like, guys, stop thinking. Keep it simple. Keep it simple.
Keep it simple is the way to do it because, look, for me, there's very few times where I'm the smartest guy in the room. Usually when I'm just the only person in the room, all right? I've built these systems and these courses and these strategies around the way I trade. It's got to be keep it simple. If it's not keep it simple, if I don't get it, how am I going to use that information to make a decision? If there's one thing you've got to be as a trader, it's decisive. So I found that the better the trader I was working with, the less they had on their charts. I've got MACD, the 10 and 20 moving average, and that's it, price action. Keep it nice and simple, keep the head clear, avoid analysis paralysis, and take the pressure off. And that's what the checklist system does.
It's amazing, man. There's so many gems in that seminar. I definitely want to come back next time you're in London. I have a few last questions to ask you, Craig. As of today, which platform do you love trading on when it comes to cryptocurrency? Mm-hmm. And also, right after that, if you mind telling us, what are we lacking in terms of what you've been used to in the off-chain world and the traditional world that you would love to see on an investment or trading platform? That would be
good questions.
Amazing.
For me, BitMEX is one. It's a terrible platform. Sorry, BitMEX. No, actually not sorry. Get better. It's a terrible platform. You got good leverage, good margin, right? On Ethereum, you got good margin. On Bitcoin, of course, XRP, it's pretty good, right? The volume is really good as well. So naturally, you trade a bigger account, you want volume and you want margin. That's what I'm focused on. Aside from that, use Bitfinex a bit, but the volume seems to have become real thin. Now, I'm not sure if it's just because of the market at the moment or if there's something else going on. Obviously, Bitfinex is having a lot of problems around the USDT. It's a constant boiling pot of he said, she said. It just seems like one of those big rumor mills until something's proven otherwise. I'm pretty happy to work with them, but a smaller amount. And also Binance, just because, again, they've got volume. What does the space miss? It's lacking a lot, like a lot, in that trading world, right? If I go and trade with an external brokerage firm right now, I can go in and I can put in my entry level in, and I can put my stop loss level in one order. So once one's triggered, the stop loss goes in. So I'm instantly safe. I can go to bed with an order raised and know it's safe that I'm not going to bed with a naked open position, right? And I can also have multiple targets. The other thing I really like is that what we're lacking in crypto is that the calculation of risk is not clear. So let's say I want to risk half a Bitcoin per trade. If I put in my entry price and my stop loss and the amount of contracts, there should be a box that says you are risking 0.5 of a BTC, which converts to XYZ USD. It makes it so much easier for people to go, oh, okay, I now know how much I'm risking. I'm not going to go out of control. And I also now know what my entry and stop loss will be because I can put it on the same order. This allows people to trade more frequently, more easily, more risk managed, more calmly. And that will lead to better outcomes. Better outcomes leads to more volume exchange. More volume exchange leads to more happy exchange people, right? It's a very simple process in my eyes, and nobody's doing it properly. There are some small exchanges that I've interviewed on the Trader Cobb crypto show that are doing the orders correctly. But the catch-22 is the small exchanges that are doing these orders have, hardly any volume. So it's like, oh, great orders, great, terrible volume. It's like there's an arrogance in the system right now where it's like we made so much money so quickly, we don't care what you have to say. They don't realize that the plant might have grown really quickly in good times, but if you don't keep watering that plant, that goddamn plant's gonna die. It's gonna die. The tree could be 500 years old and 100 meters high. If it doesn't have water, it's going to die. So empires will fall when good products come out, unless those empires are in the position where they actually do it properly, and I've seen nobody do it properly just yet.
Well, hopefully they'll listen to your advice, especially someone who's been trading for so long. Thank you so much for all your tips. Where should we follow you? Where's the easiest way to catch Trader Cobb or Craig Cobb?
Thanks, man.
Yeah.
We're on Twitter, Facebook, Instagram. Just at Trader Cobb. We've got the YouTube channel at Trader Cobb. The Trader Cobb Crypto Show, which is the podcast. Get that on any platform that you listen to your podcast. We're very fortunate. We got #1 in the US in business section, 9 other countries last year, which was pretty sick.
Congratulations.
And of course, get across to tradercobb.com. We've got a newsletter that's free. Right, you can sign up to that. I'll send you a video a week, or sometimes 2 videos a week. On the markets, giving you some commentary, that sort of thing. So yeah, tradercobb.com is where you want to find us.
Awesome. So guys, if you got some few gems here with a real trader, don't forget to like, subscribe, but more importantly, blast that bell notification and drop a comment if you have any questions. We're friends with Craig Cobb here at Trader Cobb, and he'll definitely help us answer those questions for you. In the meantime, see you next week on Cryptonites.